let's try and understand the global playbook currently, and then India within the global playbook with Mark Matthews. Joins us right now, needs no introduction really. Mark, so good having you. Thank you so much for taking the time out. I'll come to India in just a bit, Mark. Just a quick flash thought on what do you make of all that's happening in the world in the last 20 to 30 days? Jerome Powell's comments last night set the cat amongst the pigeons of sorts.
So I guess there's two questions there. The first is nobody, including myself, foresaw the kind of V-shaped recovery in the markets that we have had. I think even if you had told us about all the fiscal and monetary stimulus that's come out, we still wouldn't have envisioned the NASDAQ being up on the year and just less than 5% below its all-time high. And the S&P only where it was back in October. Given all that's happened since now and then, it's nothing short of incredible. Having said that, our view is that this is a structural bull market still, and the only way we could believe that to be true, of course, is if we think that the virus is going to go away. And there, I won't claim to be an epidemiologist or any other kind of scientist who knows about those sorts of things. And even among those people, there are huge degrees of debate. But our view is that it probably should kind of peak around now globally, and then we'll have choppy outbreaks here and there of second waves and third waves as the economies reopen in various parts of the world. But around 2 months from now, then it'll just start to go away. And if that's the case and we move toward a more normal economy next year, then all of the stimulus that's been put in place this year is basically providing a bottom to the market. So it's not going to go down that much because people are already thinking forward to recovery. Now, just on your second thing, Jerome Powell, actually, I thought that in his speech, which was unscheduled, he would be basically scolding the market for thinking that negative interest rates were possible, because as you may know, Fed Fund futures had been pricing in last week negative interest rate in January of next year. But his speech was actually the opposite. It was calling for more fiscal stimulus from the government and saying the economy's in a precarious state. So, I mean, it's one of those bad news is good news things, but I think that what you could infer from that is there will be more coming from the government.
Mark, how do you place countries which have very limited fiscal headroom and are trying to do their bits to stimulate or give backstops to critical spaces versus the other options available, the likes of US or the others? Because India announced that that big speech by Prime Minister Modi to give stimulus, which could be a tune of 10% of GDP. A large part of it seems to be monetary in nature. How does that stack up for somebody who's choosing to invest in India versus other options available?
Well, we do think that the ability of countries to provide fiscal and monetary stimulus will be important. And where that will be felt probably is more in their currencies than the financial markets, stock and bond markets, because there's a ripple effect through the stock and bond markets. In other words, if the Fed is buying investment-grade corporate bonds and high-yield corporate bonds, that will trickle through the whole food chain to end up helping, for example, corporate bonds in India. But where you would see the inequality of governments and central banks is more in the currencies. So we would expect broadly more weakness in currencies where the government and central bank don't have the ability to really pack a punch. And then again, on the other side, what we have to admit is, and it's a great mystery, why most of what I would, for lack of a better word, call it is the emerging world, and I'm including India in that, has not been so devastated by this virus as the West. And it's pretty obvious, even if there isn't as much testing, it's pretty obvious that it's not hitting India and other emerging markets to the same degree as it did Europe and America. I can't go into the details why. I mean, Australia and New Zealand are developed Western countries, and they managed to escape it more or less. But what I guess I want to say is that the actual economic lockdown has caused a lot of damage. But I think there can be some degree of resiliency in emerging economies in returning to work, simply because they were never really devastated by the virus the way, Europe and the US were.
So, okay, in which case, since India is not quite going out all guns blazing on the fiscal side for the stimulus, which could probably help not stretch the already stretched balance sheet too much, Mark, and the resilience of EMs that you mentioned, my question is, at 19 times or 18 times trailing earnings for MSCI India, is that looking like an expensive market, or would you believe that such valuations with a bit of dip could sustain?
Well, I prefer to look at it in price to book terms in years like this, because there won't be any earnings anywhere. And actually, India on slightly north of 2 times is a long way below its historic long-term average of 2.9. So on a valuation basis, I think it looks good. But I also think that the market will reward growth rather than the value in an environment of low interest rates. The trend that we've seen of growth outperforming value primarily in the US technology stocks is continuing. It will continue, because in an environment of low overall global economic growth, people will go out of their way to pay up for where they perceive to be the individual cases of growth, for example, US technology stocks. And I'm sorry to say, in that context, India doesn't rank high. India bizarrely ranks pretty well as a value proposition relative to its history, but the growth is absent, and there we could fall back on, what you were talking about, the economic package that was announced yesterday, and I believe there are more tranches coming. But in and of itself, I didn't see it as being a major catalyst for really getting India's economy back on a growth trajectory. I see it more as a bridge to just get over, the damage caused by the lockdown. But often in crises, you get opportunities. In 1991, I think most people agree, was like that. India had a balance of payments shortfall. It had to go to the IMF, and that resulted in the reforms, the shutting down of monopolies and reduction of tariffs and opening up the economy. And that really ushered in a great wave of structural growth for India. I was hopeful. I mean, I wasn't thinking it was bound to happen, but I was hopeful maybe something like that would happen this time. And I have to say, I'm sorry to say it isn't, because that isn't this kind of reform package.
Okay, Mark, just one final thing. So is that something that you would look for as somebody sitting overseas and looking at a bunch of markets? What is that? I know there are multiple things that need to be done, but what is that one thing that could make you look at Indian markets with some bit of optimism compared to whatever your level of optimism might be right now?
Well, there's many more than one. I am structurally positive on India in the long term. I mean, I think it's quite interesting that a big company like Apple could move a lot of manufacturing to India. That would be a real game changer, for example. But the big one is the non-performing assets. Those are really crippling the ability of the private sector to access capital. And I think that there'll be a very long organic process where deposits will simply move over time from the bad banks to the good banks, and therefore that itself will strengthen the financial system. But that will take a long time, and I would have preferred if the government had seized this opportunity to really, fix the NPA problem, get the banks sorted out, so that when the economy does recover next year, you're in a strong position to lend.
Well, let's see, we have a bad bank proposal in the works, Mark, and maybe ways like that could probably help. But I think it'll be fruitful to see what the details are before we kind of speculate. But this was so good talking to you today, Mark Matthews. Always is. Thank you so much for taking the time out.
Thank you.